What a brilliant opportunity for everybody to get to learn some things I think that we at other conferences never get an opportunity to learn. And when she gave me the opportunity to assemble these amazing people to talk to you about angel investing and venture capital, I was so thrilled because I haven't seen a lot of opportunities for women to learn the nuts and bolts of it. I think it's kind of a mystery to them. And I want you to walk out of here knowing what an angel investor is, what a venture capital fund is, what a limited partner is, and how you can be involved or how you can get funding from them. So, does that sound good? Yeah. Okay. I also, I'm going to introduce each of them right now. You'll have an opportunity for Q&A after, and also how to contact them. Did I mention that to you all? Okay, first here we have B. Pagels Minor. Amazing human being, has created products for as well-known companies I think you've heard of as Apple and Netflix. Helps consult startups and is also an angel investor. Put it together for B. Next up, we have Andrea Quinn. Andrea Quinn, her workshops have changed my wife, Deborah, and I's life. She puts on live women's workshops. I think one's coming up in October that teach 9 tools to accomplish anything. Today, she's going to be talking to us now and in the afternoon about your mindset. What's holding you back from funding that company or becoming an investor? What is holding you back? We're going to talk about money mindset. Give it up for Andrea Quinn. Next, we have Laurel. Laurel Mintz is a founder of a VC fund called Fabric VC that invests in consumer and consumer technologies. And she just started that fund. I'm actually producing a film about the fact that more women are starting their own venture capital funds than ever in history. And her and the other ladies on the panel who are starting their own fund are part of that amazing acceleration to change the underfunding of women. Please give it up for Laurel Mintz. Next up, we have Kelly O'Connell and Ann Metzger. I mentioned them together because together, along with their other partner, Shelly Iocana, they too are starting their own venture capital fund called 360 Venture Collective. And you're going to learn all about that and what they invest in: tech, health tech, fintech, and future of work. Did I get that right? Give it up for those ladies. Because I don't have to tell you that it's no easy feat to raise a fund. So let's get started with the definition so that you walk out of here understanding it a little bit better than when you walked in. So first of all, I'm going to default here to B. B, can you just explain, being that you are one, what an angel investor is?
So first of all, thank y'all for having me here today. This has been really, really great. So I looked up the legit definition because I was like, I'm going to do my homework and pretend like, I really care what other people think. So the actual definition of an angel investor, according to Investopedia, is a wealthy individual who invests in an organization at the pre-seed, seed, or Series A level. And I was like, that is a terrible definition, all right? Because first of all, when I first started investing as an angel investor, I definitely did not feel like I was wealthy. In fact, that student loan was still in my closet. But with my wife and I, my wife who is right back there, Alyssa and I, we made the decision that we still wanted to do some investment. So what we actually did is we cash flowed our first angel investments. And in fact, Runner was one of our first investments, when they did their pre-seed. So I share that all to say that it's really just an individual who has the ability to cash flow funds to support a company that's usually at its pre-seed, seed, or Series A stage. And I also want to caveat that my very first investment, which was Runner, was $200. We do a little bit more than that now, so that's nice. But, that was our very first investment, so.
Bravo. And just off of that, I want to say we are talking about venture capital investing, and you'll be surprised at the levels that you can come in and what the criteria are. But thanks to Obama, there's also now equity crowdfunding that does give you an opportunity to invest in other companies for as little as $100, $200. So worth checking that out on things like what is it? We Funder?
Republic is my favorite.
Republic.
Like Republic has a lot of really good options, things like that.
Yeah, Republic, We Funder. There's several out there. You can Google that. But look up equity crowdfunding. It's something, we could do a whole panel on that, but it's something that you should know about because it's a really easy barrier to entry for you to start being investors. And we're going to talk about why it's important to invest in other women. So let's go to Ann Metzger. Can you explain what an LP is, a limited partner? How many people here know what a limited partner is? Okay, about 20%. Okay, great. Then it's a good question.
So I don't need to answer it since other people in the room don't. Limited partner is basically an investor. We also, I wanted to chime in, we also invested as a fund in Runner. So it's funny how we're all connected, in some way, shape, or form. But basically, an LP is an investor.
Okay, so I'll elaborate a little bit on that. So,
I need to say that I hate public speaking. So, and I'm really outgoing. So it's weird that this is uncomfortable. But I'm working on it. So bear with me.
So you all might think of yourselves as an investor if you're investing in the stock market or you bought some real estate, right? But here we're talking about angel investing. When an angel invests in a fund, they become a limited partner. And so what a limited partner is a group of angel investors that have invested in a fund. And the reason that you would invest in a fund instead of as an angel into a specific company is you have very wise women like Ann and Kelly who have a fund, or Laurel, that have the expertise of knowing who to pick and put in that fund. So now your money is grouped with all the other investors into a fund that your fund managers are then investing in. They're vetting them for you, so you don't have to know. And it can be very lucrative. It's why you would want to investigate that. So next up, what is a fund manager? Let's give that to Laurel.
Hi. Well, first I want to add on, the LP and all of the jargon and language around investing is intentionally made to make us feel like we don't know what the hell we're doing. So my call to all of you today is to ask questions. If you don't know what an LP is, ask us. That's what we're here for. That's what I did on the agency side, making sure that we could demystify these conversations. So I really hope that if you don't know something, that you ask the question. That's the only way we're going to change this very pale, male, and stale world. So, to that end, what was the question? A general partner, yes.
Yeah.
So a general partner or a GP, again, it's just legal mumbo jumbo. I happen to be a reformed attorney, so I didn't let it intimidate me as much. Yes, I'm on the good side now. I'm no longer evil. Just kidding. It's just someone that manages the fund, right? So funds typically have what's called carry, and then there's a management fee, right? So that's usually 2.5, and then 20. And so the GP, they make their money by managing the fund. So the management fees, that 2.5%, is what goes to the GP or the partners if there's more than one. I happen to be a sole GP, but if I had a partner, that would be split. And then, of course, all of the management fees, et cetera, for running the company, all the legal, that's so expensive, all the taxation stuff, all of that comes out of that management fee. But the GP is the person that runs the entirety of the fund and makes most of the investment decisions along with their board.
And raises the money.
Ugh, yeah, tell me about it.
Okay, so that's the toughest part of the GP, right?
Yeah.
Is to raise the money. And so the general partners are the people you want to know. If you're someone that wants to go get funding from a venture capital firm, you have to find out which venture capital firm invests in your type of business. If it's a beauty product, if it's a tech product, if it's a medical product, you can't just go to any VC. You have to go to one that has a thesis about your particular product or service. Does that make sense? And then you want to become friends with the GPs because they're the ones that decide where the money goes. So the LPs put their money, the limited partners, the angels, put their money in that fund, and these GPs are the ones, the smart ones, that are deciding who's vetted and who's getting the funding. You want to know them. Does that make sense? Okay.
Catherine, do you mind if I just add one thing there?
Sure.
So the other thing that's really great about GPs, or the GPs that I work with, is that even if their fund can't invest in you, so like let's say what your particular industry is not something that their fund is being raised for, they often have connections to the other funds, right? And so it's really great to have GPs as friends because they often will funnel some opportunities to other GPs that might be in your lane. And so I think that's an important thing to
Especially
keep in
this
mind.
category, like in women and diversity, and specifically, like we are a very small group, and so if I can't invest in you because it's not in my thesis, that's a great point. Like make friends, say, hey, I know that this isn't within your wheelhouse, but are there other, like just ask for two people you could introduce me to who are investing in my category. It's a great tip.
And that's why you want to know these women. Wink, wink. Okay, so what is venture capital fund? I think, Kelly, you're great at explaining something like this. You've been in this space for a long time, super successful, and now starting this 360 Collective Fund. So, Kelly, explain exactly how a venture capital fund works and how someone gets money from them.
Are you all ready to get bored? Just kidding. So if venture capital is an instrument for financing a business, and it's not, as Arlen said earlier, it's not an instrument that every business should utilize. In fact, it's one of the most expensive forms of funding that you can achieve. But what it does allow for is growth and scale that allows for you to outpace the competition. And so if you're building a company where your intentional exit is scale, you're intentionally going to public market, or you're intentionally going to be serving an audience across multiple markets, and you're looking for scale, then venture capital becomes a pathway. If venture capital is the instrument, and if limited partners are the investors, they're the ones that are pooling their money, the fund is managed by the general partner, and the fund is just the collection of money. The fund is controlled by a limited partner agreement. It's the terms in which that money can be invested. You learned a little bit about some of those terms from Laurel. So typically, there's what's the amount that you're allowed to invest as a limited partner, what's the check size that the GPs, the general partners who are managing it, are allowed to invest in companies. What are the stages of the companies? That's one of the ways that a venture fund works. It works around the stage or an industry. So Catherine has gotten very good at knowing our industry verticals that we invest in at 360. And we invest in an early stage. And we invest with a specific check size. Funds are typically controlled over a period of 10 years. So that's the common fund life cycle. And the fund typically has an active investment period during the first 5 years, which means that as the fund's total assets under management are gained, there's 5 years that the general partners can go out and identify new companies to write those checks to. And then after that 5 years, they go into a management process. And that management process is because in order for a venture fund to be successful, they have to capitalize, which means the companies they invest in need to find a way to exit. The three most common exit paths: public market, acquisition, and the one we don't want to talk about, dissolution. So that's a venture fund in a nutshell.
Great. And she did say that because everybody I would meet, I'd go, oh, you have to talk to 360 Club. And she'd go, Catherine, we don't fund everybody. And I'd say, well, oh, who do you fund? And then she would tell me, and I think I finally got it down, right? Tech,
You sure
med
did.
tech, fintech, and future of work. Okay.
Prop tech.
Can you give an example of a good company? Like, let's say somebody out here has an idea. They already have the company. They want to scale it, maybe get it online to find thousands of more new customers. Can you give us an example of maybe someone that you funded or would fund, like a particular type of product? Or?
Runner. So we invested alongside Precursor Capital and Runners pre-seed stage funding at a slightly larger scale than the open market. But we also have 6 companies currently in our portfolio that we have invested. So we're doing something unique. 360 Venture Collective is targeting a $25 million Fund 1, and we're raising and deploying simultaneously, which is a method that we're able to do because of a 506C registration filing, which basically means that we're allowed to talk about our fund as we're deploying capital. And that means that we're allowed to invest in companies that are also raising in a public way. One of the companies that we invested in is solving a problem that I personally think is incredibly important, which is around data-driven pain management. So it's a B2B solution that's solving for the ambulatory care market for a community that's historically been underserved, which is typically an economically stratified community and racially diverse community. And they're solving for a very common problem that many of us have heard about publicly, which is around controlled pain management, which today is done by a 0 to 10 pain score. They've created a actual data-driven pain score using a very simple, low barrier to entry wearable tech solution. And that's an example of one of our first companies.
You know, this is one of the reasons you want to get involved in this venture capital world, not only because women get less than 2%, which means men get 80, 90, 98%, but another reason is because you meet amazing people like the ones on this panel today. Every day, that's who I talk to. I mean, and incredible women like you out in the audience that are starting and growing your businesses. I mean, incredible, incredible women. That's why you want to immerse yourself in helping other women if you can. So I want to turn over to Laurel. If you could explain, how does somebody's out in the audience, they feel like they have a good consumer or consumer tech product. How do they apply to your fund? What's the procedure?
Well, since I'm a sole GP, kind of the buck stops with me. And we have an incredible amount of deal flow. And that's the reason I started the fund, because we were so heavily networked in both the high net worth communities and in the networks that had the kinds of companies that we wanted to invest in. My prior life was on the marketing side. I ran a very successful agency for a long time in this space. So we really kind of went into those networks to find the companies that we're interested in. But we are marketing ourselves just like you are all marketing yourselves. So we're looking for deals and new concepts and new companies all day long. The easiest way is to just email me directly, honestly, laurel@fabricvc.com. And then we've got a pretty stringent diligence process. Diligence, again, big word. All it means is we're trying to make sure that you are investable, that you fit our thesis, that we think we could see returns, that it makes sense. Really, that's like the baseline for what diligence is. There's some number crunching that happens in that world. I'm obviously on the marketing side. We put all of our companies through our licensed listening software that we work on the agency side to pre-vet your numbers to make sure that you're really actually reporting your numbers in your vertical in a real way, which also means we can see how far you are from your direct and aspirational competitors in your space, which should mean that we'll be able to kind of predetermine whether our check-in will make a meaningful difference in scaling your company. So we're using technology in a different way to do that. But honestly, if you want to get into the cycle, email me. I'll take a look at your deck, and I'll let my assistant know I would like to have a conversation or block that shit. Just kidding. Seriously, because we only have so much time in a day, right? But I'm doing it in a very nice way, like, hey, this isn't within our thesis, or like, you're too early for us, or it's just not a great fit.
So other than applying to venture capital, which isn't for everybody, but if you have a scalable company, it's a great thing for you to explore. Angel investors are also a great way to get, and I'm speaking to an angel investor here. I'm about to ask you what you invest in, but it is free money. You don't go into debt. You're not bootstrapping anymore. It is an important reason to go to angel groups and meet angels and find out if they believe in what you're doing. And it doesn't have to be such a large scalable business as it would be for venture capital. Does that make sense? Okay. So since you are an angel investor, B, what type of companies do you invest in and why?
So first of all, I have a podcast called The Drops Podcast, and we have an entire episode on this, which is like, what companies we think are real and what companies we don't think are real, and how we go through the process of thinking through that. But having said that, there's a couple of different things that I think about. So first and foremost, I was a product manager for over a decade. So if it's a tech company, I'm looking at these opportunities and going, have I seen this before, right? And if I have seen it before, do I think that this particular team is going to do it better than anyone else, right? And that's really a huge part of it. It's just, do I trust that these people can do something great? And I will say that, because I'm so comfortable in tech, it's very easy for me to make choices in tech. But ultimately, what I'm looking for is to get as much equity in as many companies as possible in the earliest rounds as possible to give me access later. So I actually do pursue companies pretty much across every particular industry. The only thing I do shy away from is retail. So I actually started off back in the day in retail. I know how hard it is. I don't mess with retail. I'm like, y'all, I was like, and also I love clothes. I know how much I cheat on all of my clothes people, okay? I am not loyal. So I know that's not the business that I'm looking for. But other than that, like everything, like one of the companies that I recently invested in was a petroleum company, right? And so they're revolutionizing how they're gonna make solvents and things like that. And I was just like, well, that makes sense because, we need to be greener over time, right? But I don't actually know anything about petroleum, right? I had to go find some people to give me that information. So having said that, pretty much everything is up for, I'm up for pretty much any of those different industries. It's really more about who's actually behind this and whether the idea is executionable.
If that's what you're investing in, you need to see Kelly. I couldn't help myself. I got to connect them. Okay, so everything makes sense so far. I hope you're learning something new here. Now, why would you want to become an investor, and who qualifies? So let's talk about that. How much does someone need to invest in an LP? Actually, let's first go to Laurel and Kelly about what does someone have to earn to qualify to be a venture capital investor? But then let's talk with Ann about the alternatives to that, because I know there's different levels. So let's first talk about, what kind of people invest in your films? What's the qualification, Laurel and Kelly?
Firms.
What?
Firms. We got it. We're good.
Did I say film?
Go for it.
Sure.
Oh, I had that in my mind. Yeah.
Yes, exactly. A little faux pas.
So, as a 506c fund, we are required to have accredited investors. And so earlier today we heard about how exclusionary that this industry can be. And we had to make a decision when we chose to be able to publicly talk about our fund and our firm that manages the fund, to decide if we wanted to go that route. To be an accredited investor, there are a number of criteria. I would encourage each of you just to Google it, because if I give you one of the criteria, it will leave you feeling out on another criteria, and there are a wide variety. But if you Google accredited investor, the first answer that comes up will give you a really solid answer, and that's the best place to start. What I can say is there are many channels today to make this possible. You heard from B, the heavy lift that it can be to be an angel investor. You have to do your research, you have to go out, you have to create the connections, you have to network to be able to find the deal flow. An advantage that you have from investing on a platform such as Republic is that they're given to you in a way that makes it very palatable to read. Angel List, very similar. And so those are different channels that allow you to invest. And then finally, in a fund like the ones that we're raising, you have the ability to invest. For us, we want to provide an opportunity to create generational wealth, not just for those who have historically had access to venture funding. That's why we chose to create a publicly raising fund. And so we're intentionally going out and we're meeting with LPs who are accredited, but who don't fall into the typical class of VC investors. And so our minimum is $25,000 for our fund. And that $25,000 allows you to set it and forget it in a similar way to being able to invest in your 401k.
So our approach is a little different. And then I'll just also add that as a venture fund, there are rules and regulations in terms of how many LPs you can have. So you need to be thinking about that as a fund in terms of when you set your minimums. Now, that said, our minimum is 250, which is up there, but we started the fund because I personally had a lot of high net worth community, women who had recently exited their businesses, gone through liquidity events, divorces, things like that, and I knew that they needed something to do with that, the future of their money. And also, that said, we have the ability to put together separate LLC groups so that even if people don't have 250 to invest as a sole LP, that they can pool together groups of women and men, we accept all, and non-binary, to invest in the fund. So we have a couple of women's groups that have done just that. So they've gotten like 10, 15 women together, and everyone's put in 25K. We also have a lot of what are called SPVs, special purpose vehicles, so that we are showing track record for this brand new fund, because that's the only pushback that we've gotten. And in those are typically smaller allocations. So that might be a $100,000 allocation for us, and then we go out to a couple of our LPs, and they can put in 10K or 5K or 25K, whatever that looks like. So there are certainly kind of minimums on funds. The last thing I'll add is that we also take smaller checks from more strategic investors. So we have some younger women and men and non-binary people who wanted to come in but didn't have 250, and we're allowing them to come in at a smaller level because they have networks of community that we believe will also help positively impact the fund, whether that's with their services, with their connections in the community, or additional capital. So there's a lot of different ways. As my vegan head of operations says, there's a lot of ways to feed the bird instead of skin the cat. I don't know. It's a weird one. He refuses to let me say that.
So I hope you know from what we've said so far is that from $200 to $250,000, wherever it lies for you, everyone in this room can be an investor. Okay, in another woman. And why would you want to do that? Well, women happen to be more successful at their businesses than men on the whole, and it's a good investment. And in some cases, as I'm sure some of them would attest, you could make a lot more return on your money than you could in other types of investments. Let's say the stock market, which also is no guarantee, right? But I have personally known investors that have put in, $25,000 and made $1 million. I mean, the return is incredible if you hit the right, unicorn. So, how are you going to get yourself to be an investor? Well, let's talk to Andrea Quinn about mindset. So first of all, Andrea, who's an expert in this arena, has a workshop this afternoon on mindset and how to build your wealth through your empowering your thinking. What does it take? What mindset does it take, Andrea, for someone in this room to go get that funding? What's the barrier to entry there?
Okay, well, I think one of the most important things that you can do as a woman is to walk in knowing the power that you're wielding. See, we come in making apologies for things. We're sorry, are we late? We're sorry, we didn't do it right. We have all these issues that we need to get through as women. We were listening to somebody talk earlier about imposter syndrome. Men don't have imposter syndrome. They think they're better than they are. And it's like crazy. Yeah. And I'm like, wow, how do they do that? Yeah. Right? Why are we apologizing? So first of all, one of the things that I teach is your ability to be receptive. See, your only job in this lifetime is to receive so you can create. So take a deep breath with me. You just received free air. Is that amazing? Receptivity. You can't walk in doing it because you're not a doer. And how do you receive? You have to, first of all, not go in with a plan B. See, women who have a plan B are already walking in thinking they're going to fail. And this is a vibration. You guys, as much as getting your portfolios aligned and getting your money aligned and all of your connections aligned, if your inner life is not connected to your own intuition, how many times have you known something and you let somebody else guide you and you said, damn, I knew it? You knew it. You have to listen to your inner being. And how do you do that? Practicing. So you know how they talk about investing a little bit at a time? You need to spend a little time every day taking a deep breath and reminding yourself that every in-breath is your receptivity. I'm not here to do anything. I'm here to create everything. And when you understand the creative being you are as a woman, you're going to walk in, and don't forget, you're pitching these people something they need. You don't need their money. They need your ideas. And when you walk in holding that much power, they're going to say, I'll have what she's having.
I'll have what she's having. Andrea, I have one other question for you. Okay, so we've talked about, how do you get past the fear of walking in and asking for the money? What about how do you get past the fear of letting go of some money to invest in other women?
Okay. So one of the things women have to get used to doing is becoming unattached. We're attached to so many things. What do they think of us? What do we do? We're still ruminating over that asshole that dumped us 10 years ago. Like, right? We hope he's still, doesn't have his hair. You know what I mean? Like, we go through these things where we can't let go. And I'm telling you right now, there is a saying, a spiritual saying that if you will remind yourself over and over again, which is, I am open to everything and attached to nothing. I am open to everything. And if you are going to be an angel investor, or if you see whatever it is you're going to want to create for yourself and with a group of people, you're going to have to let go of it being money. This is an exchange of generosity and ideas and energy. And money is a very small part of it. And if you're becoming an angel investor for money, you're cutting yourself off. We need to make contribution. And when we can understand that you're walking in unattached, let go of the money and go, okay, how can I show up? Who can I contribute to? What can I, and when you are, the difference, like, people that have commission breath, that thing when they're standing in front of you and you're just like, wait, they're just doing it for the money, right? No, they're doing it when a woman shows up with her heart and it's like, oh, she really loves this. See, not she cares about it. She cares about it because she loves it. And if you can't walk in as a VC wanting to love something, man, that's going to shift the game. Okay? So it's about love, really.
I love that. Love that. I follow this woman. She's changed my way of thinking and is amazing. And I will be at your workshop at 3 o'clock. One thing I've learned from Andrea is that, like she said about letting go, I've been in the same shoes that you guys are in right now. I've just been raising money for my documentary about how hard it is for women to raise money. Do you know how hard that? I'm like, are you kidding me? And it's just like a comedy. It's like a Saturday Night Live skit. You don't understand. We don't get money. No, we can't give you any money. But I have learned.
They just asked you, what's the documentary called?
Oh, the documentary's called "Girls Just Want to Have Funds." Yeah. And it's about all these women that are starting funds for the first time in history at an accelerated pace, which is why we have several on the panel today. And that's going to be a game changer, but only if women invest in those funds. And that's why it's so important that women become angel investors. That's what's going to change it. We're going to change it. Somebody said to me, oh, don't you want men putting money in those funds? Of course we do. How's that been working for us? Really? So I did a TED Talk on that called Fund Women Save the World. And I do believe that is what's going to save this world. The Dalai Lama says the Western women will save the world. And I say, how are they going to do that without funding? A lot of people don't know that it was women that invented the refrigerator, central air, fire escapes, and of course X-rays, and all these things that have been changing the world for a long time. Nobody even knows that it's women that created this stuff. Computer programming, hello. And we're 50% of the brain power or more, right? Probably more. And, if we don't fund our innovations, the world is going to suffer. And so you, sitting here in this room, you're the solution. You are the solution. You can go out and put $200 in Republic and get behind a woman. You could go, if you're in a position, and put $25,000 in a fund. Or, God bless you, if you could put $250, that's where your money should go rather than just continuing to put it in real estate or whatever. That's fine, but are you helping make the world a better place? Are you leaving your legacy by helping another woman, which on the by the way, can also be a very lucrative investment for you. Plus, 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 right? Thank you. So I'm gonna give you a chance to do any Q&A. Do we have any questions? No questions. Have we done that good of a job? Okay. All right. Wow.
I have several questions, actually.
Of course you do.
I can start with one to not take it from. I appreciate what you're saying. Like, there's been tough questions, especially in this industry where, like, I'm a creative typically, so learning about money and numbers and all this stuff is kind of like it's like learning a new language. So, forgive me. It's Laurel and then
Kelly.
Kelly. You said when you invest in a venture capital fund. I mean, I could use a mic, but you said when you invest in a venture capital fund that there needs to be 3 rates of return, and you said public market, dissolution, and acquisition, I believe. Can you explain what that means? Because I know public market is like stocks, right? But everything else. Chinese over here.
And this is such a wonderful question. They're all great questions, but unpackaging the language of venture capital is one of the tools that we need to use to shift who controls how wealth gets deployed, and whose ideas get produced at scale. And so thank you for asking. To answer, essentially for venture capital to work, because we're taking money from investors, and venture capital, I'm going to say this for the SEC because it's recording in the back, is a high-risk endeavor. You could lose all of your money.
And high reward, potentially.
It has the potential to also be a really high reward return. And the way that those returns are evaluated is in the successful transfer from the early stage checks. So companies move through stages of growth. Venture scale companies have to be able to move from idea stage all the way up to repeatable scale at a level of profitability that is typically at least $1 billion for a financial exit to make sense. And this isn't a plug for you to follow me on Twitter, but I just recently did a post on Twitter that helps explain the economics of that. One of the ways to go from receiving money that's being borrowed and then earning it back and creating that capital exit is to go public. So you've probably seen the IPO, and you've probably heard the term unicorn. And that just means that you're allowing for public market investment, stock market. The second way is through acquisition, and this is actually the most common exit. So a larger company acquires a controlling interest, repaying the earlier investors in the company at a multiple, hopefully. Dissolution.
Like if someone buys a company.
So Microsoft comes in and Microsoft says, hey, I love what you're doing. It makes sense for our portfolio. I'm going to give you X amount to be able to acquire you. And then finally, dissolution. This is the one we don't want, but this is essentially, there's also variations, but just to make it simple, I talked about 3. But essentially it says, I ran out of runway, that's the amount of money that we currently have, to be able to take this product to scale, and I now have to repay, typically for a lower amount, or I just have to file for bankruptcy and exit out of the market. Now, they could file for dissolution, or they could sell to a private equity team that take the company and dismantle it for different elements. There's a wide variety of different pieces around that, but don't get caught up in that. Essentially, think about, for a venture fund to work, the general partners are making bets. They're making bets on early stage companies based on a thesis. The ideas about what they think will pay off over the life cycle of that company. And they're making bets that they believe that, let's say for every 10 investments, Two will have the potential to go to that venture scale of the $1 billion that they're talking about. And they're aiming for somewhere around 3 to 5x on the return for the fund. And what that means is they're looking at, if I make 10 investments, I'm looking for one of those that's going to return the fund. And so you brought up a really good point, and I think it's important. The SEC controls a lot of elements of this, and they've done this in part to control, they say it's for protection, but it's in part to control who has access to wealth. And so one of
Systemic issue, for sure.
And one of the key elements that makes this so exclusionary is that 200 investor number on a fund. So you mentioned that there's a fund limit. We were able to go public because we had a really strong initial raise. So we were originally planning on raising a $10 million fund with 360, and we had 27 million that was soft circled. And soft circle just means commitments before close. And so we were very lucky. We looked at that and we said, those LPs don't look like the investments we're making. And so we're going to make a choice to publicly raise so that we can diversify not just who we're investing in, but also who has the potential to earn from those investments. And that's how we chose that structure.
I am going to make a plug. If you all follow Fabric Ventures, we are doing a series called The ABCs of Venture to demystify all of this jargon. So make sure you check us out, follow us. This is exactly why we're doing that.
Yeah, and I just want to mention before, because I know we're going to end soon, and I will take that question, is that if you really want to learn about angel investing or venture capital investing, which we delineate, it's two different things really, there's angel groups in every area. I know some of you are from Dallas and Arizona and other places, but no matter what city you're in, there's an angel group. And probably an angel group for women. You could look up also Golden Seeds. And they all have programs to teach you about this so that, you know, it's actually a fun process to learn about. And can you imagine, it's kind of like the book club of the 21st century. You go in and instead of reading a book, you're all looking at a pitch deck of some incredible genius woman who's come up with some amazing idea that you otherwise wouldn't even know about if you weren't in this circle. Does that make sense? It's like so cool to immerse yourself with these amazing women like yourself. And that's really the opportunity here. How many people here want to now or in the future be an angel investor or a fund investor?
Everyone's
Oh my
hand should
God,
be
I
up right
love
now.
you.
Yes.
I love you. This is my people. All right. We'll take a couple more questions, and then I just want them to tell you how to get a hold of them. Yeah?
Yeah, mine was so if you got this great idea, right, and you want to get investment, there are do's and don'ts to present to you guys, right, on a spreadsheet. So is there a basic spreadsheet that you could use as a beginner to say, how do I put a presentation to even get through for you guys to even look at?
It's a great question. I think back to the conversation we were just having about angel networks. I would start there. A lot of them and the accelerators have programs that will help walk you through what your marketing deck should look like, what your financial projection should look like, how big or small you need to, really have that bravado piece be in your deck. I would definitely start there. I wouldn't do it on your own. Or there's tons of consultants that have gone down this venture path, helped fundraise for small, medium, public companies that can help you work through what that deck should look like.
And I will mention that She Angel Investors, my company, that's what we do. We try to help connect founders to
Hello.
You're kicked off.
Investment resources. I mean, that's what our podcast is about, Invest in Her. Every week we have on female founders looking for funding or funders who are funding women. And also the film that will be coming out. Hope to see you all at that premiere. And then also, different e-courses and stuff that we've created, because that's what we want to do, is tell you how you connect to this funding. What's that, crossover? Like you said, it's a great question. You have to have a great pitch deck, and some other items as well. But that was a great question. Thank you.
One quick note there. So, as I've been on sabbatical from work, I had a baby in November. This is what people like me do too, right? So there's like a lot of operators who from our on the side, we actually consult with a lot of companies. So, for instance, I've been doing So Gritty and Pink, Shira was like, hey, B, can I ask you some questions, right? So this definitely is something that a lot of people do because a lot of operators, we don't like the companies that get funding. We're just like, why did that company get funding? This company is not very good. And in fact, we've worked with people from that team, and we think that they're not the best people to work with. And so there's a lot of us who even do it for free. So for instance, I have a lot of people in my network who will say, hey, I'll totally help you out for this type of thing, blah, 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 blah. So it's out there.
Can I add to that, Catherine?
What's that?
Catherine? She's down here.
Yeah.
Don't ask permission.
Where'd that come from?
Oh, sorry. I feel like God. I'd just like to add to, first of all, I want to call out, you two are amazing. Carrie, this is such a beautiful day. Thank you so much. You're a badass. And Catherine, I don't know anyone that connects like her. I thought I was a connector. No. Compared to her, she really is amazing. And if you haven't met her personally, please do. But I wanted to go back to you. LinkedIn is an incredible tool. I encourage everybody to get on there. Kelly's the master of searching and kind of the master of everything. That's why I don't have to talk. But truly, get on LinkedIn. You will find, I'm such a fan, and I've met Kelly, where are you? Kelly is my new friend from LinkedIn. No longer is it Facebook friends, LinkedIn friends. So
Wait a minute, I connected you.
Okay, you did. Yes, okay. Damn it.
Sorry.
Anyway, that's all I have. But use LinkedIn. I encourage you.
I'll just say one last thing, which is if you're looking for a starting place, look at who's been funded. So Crunchbase is a wonderful tool. Take a look at the decks that helped other people, especially in your vertical sectors. The problem sometimes with going to a generic template or a best practices in pitch is they're often verticalized. And so it's really important to get a pitch deck and get advice from the industry that you're looking to scale in. And so I really encourage you to take a look at who's been invested in, what did they include, how do you compare, and then also VC Twitter, Tuesday evening, Sarah Letterman from 3+ Practice, which is Pitch Practice. It's a free service, and it's a really wonderful, safe space to practice.
Women Founders Network also has a similar program, so check them out.
I'm going to have them each tell you how to. Right. No, I know. I was going to say, and then we're going to have them each tell how to get a hold of them, because I think our time is almost up.
Okay,
Yeah.
I'll make this super quick.
Sure.
So I have 10 franchises. If I wanted to scale that and say, roll up all the franchises in that category under myself, would venture capital be a good way to do that?
Maybe is the answer. It depends on if there's a productization or what the public exit might look like. I think I'd probably start with the business model evaluation and look at, is there a way to bootstrap is a term that was been used earlier in the day. And so I'm sorry, I just jumped on the mic. I have a tendency to take over. But that would be my 2 cents. Is it would be maybe, but take a look at the business model for it and see if private equity might be another path, if there's another way to not give up a controlling interest. And you'd also have to really be looking at productization if it's a franchise.
Second question, just really quick, sorry.
Okay, they told me we got to wrap.
I know, one more,
Okay.
one more.
You can
So
talk to them personally, by the way.
I think other people might be curious, what is the
Okay.
ROI on a typical investment? So if I come in at
that's hard to say.
$25,000 or $250,000, how quickly can I expect a return, and what is the percentage on that return?
So it really depends on each individual company, on the valuation of each company, and on whether there's a liquidity event, a dissolution, an acquisition, all the things that were just mentioned. I think typically you're looking at a 10-year term, but in terms of the type of return, our belief is that venture is very broken right now. That's why I had to do what I'm doing right now, because I have been in this world for some time as an LP and on the marketing side, and it's just broken. So the model is you've got 10 companies, let's just say for easy numbers. 8 of them will not do much. 1 will provide a 3 or 4x return, and 1 will carry the entire fund, right? 1 will be your Google. any other business model, that would be broken. So we're, again, using technology to kind of solve or de-risk for that, but that's the model. So there's no real promise, and that's why it's so high risk, high return. It's all about getting into bed with VCs that you believe have a differentiation, I think.
I wholeheartedly agree. I know we're at time, but there's been a woman in the back with her hand in the air for a long time, and I want to acknowledge your question.
Perrine.
Who is that?
It's you.
Are you
Yeah.
sure? Oh,
Yes.
okay. Hi, Kelly. We were on a panel together, actually. And you are so smart, by the way. I'm so impressed. But all of you ladies, I'm super grateful. But your question was along my line. It was in regard to readiness to actually go and seek out the investors, because the last thing I personally would want to do is, quote unquote, waste your time. You know what I mean? I like to come prepared. I have the passion, the resilience, all the things that Arlen talked about, but having those clear steps of like, this is what you really need to bring to this table to possibly qualify for funding.
You go for it.
Okay, I just want to step in on that one real
Okay.
quick. All right, so women over-prepare,
Okay, sure.
and we waste time. Okay, so I really want to invite you to get involved in some of these groups where they can help you. Your pitch will never be perfect.
Okay.
And you will wait too long.
Sure.
So I just want to invite you to go in and mess up.
Which I'm perfectly okay with.
Because someone will see the light.
Yes.
Someone will see. And you know, a lot of people that I talk to that are investors that I coach and work with personally, they say to me sometimes, I like the person. The product may not
Right.
be the greatest thing, but I think there's something there.
Yeah.
So don't try to be perfect, because that will be the biggest problem that you'll
That's
make.
the
okay?
piggyback
I just want.
question.
Okay.
Is
Yeah.
in that event that you identify someone where you're like, not only do I like this person, but I like this idea, these things. Is that something that you, because that's an investment in itself. Like, hey, let me show you, tell you.
People
what
invest
to
in
do to
people.
prepare.
People
Okay.
invest in people.
Thank you.
Well, one,
You know, wait. She's got something to say.
Yeah.
So one quick note though. So product market fit is a thing.
Uh-huh.
All right, it is a thing.
Yeah.
And in fact, my partner on my podcast, Tam Danier, so I thought I knew a lot about product market fit, and she has schooled me so many times. So there is some value in taking on partners who can help you assess product market fit. Right, because there are many brilliant ideas, but they're brilliant ideas that should be in this storefront place here in Long Beach that they're just not productizable, right? Like there's not going to be the type of market that you need to make that really successful and scale it. So I do think that there's an opportunity to study product market fit. There's a lot of really just great. So if you go to Product Board, if you go to Lenny's letter, I love his newsletter. He has lots of great content about that. Shreyas Doshi, he's a really great person to think about in terms of product market fit, because they start helping you to kind of assess and put in a box what your idea is, and it helps you see what the products are, and that's going to give you a lot of great context as you try to build that up, because that's what we're looking for anyway. If you come to me and it doesn't make sense to me, I can't invest in it. And so to that point, there's a little bit of that I do think is very useful. Exactly.
Right.
All right, they're freaking out about time.
And as
we
you
gotta
can
go, we
see,
gotta
you all can take a picture of them up here and find them all on LinkedIn. And yeah,
All on the
yes,
app.
It's all in the app. And remember, the reason that you want to get angel investors and venture capital when you can from amazing women like this is it's not just about the money. It's about all the contacts and introductions and support. That's what comes with getting an investor. Or that's what should come with it. So that's the big perk. I hope this was a good takeaway for you. Thank you so much. Thank you, ladies. Thank you.